Markets endure another volatile week driven by unrelenting tariff headlines. Front-end vols and put skew get crushed as Bitcoin rallies alongside one of the sharpest equity squeezes since 2008. Meanwhile, the surge in US yields keeps investors nervous that things are starting to break. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everybody. I'm David Brickell from FR&T Financial. My usual co-host, Imran, is still on holiday, but we've got an action-packed show for you this week. And I'm delighted to be joined by Kean Gilbert, Head of Institutional Relations at Lido DAO. Welcome, Kean.
Super. Thanks so much for having me.
Yeah, thanks for joining us. And you've just come back from Paris, right?
Yeah, busy week in Paris Blockchain Week. Very busy, I would say. Terrific conference and events around it. Geico hosted a great event, Figment Kiln. Really well attended. Very institutional, which is nice.
Yeah. What was the vibe like?
I would say, sometimes it can be a little glass half empty, a lot of tariff talk.
Yeah.
But I would say the institutional demand is still there.
Yeah, for sure. I mean, look, tariffs are, just to talk quickly about markets, tariffs is all that really matters at the moment, I guess. Super volatile week last week, markets getting smashed at the start of the week. Then we come out with this tariff pause, everything ripped. And Bitcoin actually was kind of unchanged on the week. And consequently we've seen sort of vols get smashed. I guess one of the things that is driving a lot of this uncertainty and worry, tariffs aside, is what's been going on in the rates market. So I'm getting a lot of questions about what's happening with that. There's a lot of talk about this sort of basis trade unwind. But I think the bigger concern that investors seem to have is this idea that there's mass sort of selling of US treasuries by sort of sovereigns and this big exodus from the US on this, I guess, hit to the credibility of the US. So, I've got some thoughts around that. So I think there's a few things at play. I think generally what we're seeing is just generally a global de-risking. And there's, the US have a negative net investment position, foreign net investment position, i.e. more foreigners own US assets than US own foreign assets. So when everyone's de-risking and selling stuff that they own, the repatriation flows, you're going to see more sort of dollar selling originally. So this kind of dislocation that we're used to seeing, where you get a risk off, bonds and treasuries usually rally, so yields come lower, dollar goes stronger. It's unusual to see risk off, treasuries getting sold, so yields higher, and also the dollar getting sold off. And this is sort of sparking this concern that everyone's just flooding out of the US. That's going to cause this huge portfolio reallocation. But yeah, my kind of view on it is just a global de-risking. In fact, if you look in 2020, at the start of things in 2020, we saw a similar thing where the dollar got hit sort of first off. So I'm kind of not overly worried about that. Adding to that and to the yield moves is what we've seen with the basis trade. So essentially the market had this really levered basis trade on where they were long treasuries, short the futures to like the tune of 800 billion. That's unwinding because of the treasury move. That's exacerbating the yield move. So there's a lot of noise. There's a lot of uncertainty. It feels like it's probably calmed down a little bit. And I think the important thing for markets is that Trump seems to have blinked last week. So I don't know how you felt around that.
Yeah.
But
it's interesting. I think the pause is great. Like you said, I think volatility in the markets is probably good. In the sense of that's how you make money. I think the uncertainty is what people really can't handle. It's been quite interesting. I've been going to New York for the past kind of 3 months, once a month. I would say being there in January, the week of the inauguration, it was very much, okay, America, we're number one. That sentiment was quite strong, quite bullish. Met the usual suspects, the big asset managers, the wirehouses, and it was very much okay, this is the year we're going to ramp up. And then returning in February, I would say things had slowed down a little bit. That kind of excitement had paused, at least at that time. And then being there in March, I would say, again, the tariff conversation had ramped up significantly and people weren't as excited. But I think the overall belief in the sense of like the institutional element is coming, I think that's still strong. Like, you know yourself, like institutions don't place these small bets for quick wins. They think long term. And I think the vision is still the same and hasn't changed.
Yeah, and that's an interesting point. I mean, we've discussed this on this show sort of many times. Like, obviously, there's lots of noise, there's lots of uncertainty being caused by certainly these tariff headlines, but there's still a really underlying sort of positive pulse and impetus for crypto. Obviously, with a crypto-friendly administration, that's, providing a structure for institutions to actually come into the space. So yeah, I think that's the message from me on the macro right now. I actually think we've probably passed the worst in terms of some of the volatility, as say we've kind of perhaps seen where the Trump put lies. I think the fears around this exodus from US assets is probably a little bit overdone and should settle down. And Bitcoin, meanwhile, has been relatively sort of stable. And I actually think that will lead into and add to the credibility of Bitcoin as an asset class. So coming back to you, so tell us about your path into crypto. How did you end up here?
Yeah, well, firstly, I would say it probably wasn't planned. I didn't have the intelligence to know this was going to be a big deal. Eventually, I kind of followed smarter people, which is probably a good strategy. But I've been in crypto for around 8 years. Started my career in Deloitte doing like FS, capital markets consulting on crypto. Quite fortunate that Deloitte had a blockchain lab in Dublin, so I got to start my career doing that. After a year in Deloitte, I joined Consensus. So mainly working on like MetaMask institutional, Infura, staking, tokenization. I was there for around 5.5 years, so really loved my time there. Got to do a lot of different cool things. After Consensus, I joined a small startup for a while doing portfolio and risk management for crypto funds. And now currently I'm a contributor to Lido. So mainly focusing on the institutional side. So by that I mean like big crypto funds, asset managers, hedge funds, really anyone who has a significant amount of ETH. And the encouragement would be based on getting them to stake with Lido for the added benefits of liquidity and capital efficiency.
So I mean, for those who don't know, I can't imagine people don't know Lido Finance, but tell us about Lido and what you guys are up to.
Yeah, so like effectively Lido is a liquid staking protocol. So maybe if you take a step back for a moment, like what's native staking? So if you think about ETH today, you take your ETH, you lock it up and it generates a yield. The issue with native staking is there's a lack of liquidity. So if there's a black swan event or people want to get out of their positions, they're basically reliant on the withdrawal queue. So that withdrawal queue could effectively fluctuate quite significantly, 7 days, 14 days, whatever it may be. So for a lot of institutions and a lot of retail, that's an amount of risk that they don't want to take. So with Lido and liquid staking, effectively what happens is you take your ETH, you stake with the protocol, and you're given stEth in return, stEth. And stEth basically represents the ETH that you've staked with the protocol and your staking rewards. You can then take that stEth, deploy it into DeFi or use it on centralized exchanges such as Deribit and use it as collateral. But the key kind of selling point around stEth and Lido as a whole is this kind of decentralized element. So with native staking, you're typically just staking it with one node operator. With Lido and the protocol, it's basically decentralized across 37 different node operators. And then, of course, the original point of the added benefit from an institutional perspective, that would be based on instant liquidity. You can sell your stEth for USDC instantly and not have to worry about this withdrawal queue.
Interesting. And you guys, right, you've joined the collateral pool on Deribit.
Correct.
Right. So tell me about the significance of that and what that means for traders and investors on Deribit.
Yeah, so like as a whole, a big focus for us to kind of build this ecosystem around Lido institutional and make sure that narrative is really clear, that Lido is institutional grade. And a big part of that is working with partners like Deribit. So effectively, the ability to use stEth as collateral on Deribit is terrific. And a big part of that is that given stEth is always generating a yield, we would really push that narrative that stEth is the best asset to be used as collateral. So compared to using, say, USDC or maybe unstaked ETH, it's not as effective as being used as collateral. So I believe last year, I think June 2024, stEth was added to the collateral pool. And then what's really terrific about that is we have integrations with the likes of Fireblocks and Copper, where stEth can be used as collateral on Copper Clearloop, and Deribit is one of those venues.
Yeah, interesting. I mean, the whole sort of yield bearing collateral is just becoming like such a big sort of theme that we've discussed before on this show. How's this? I mean, you mentioned Copper and Fireblocks there. How are you guys using and growing the integrations with other platforms, particularly, I guess, custody platforms? This is going to be quite an important asset to have.
Yeah, it's critical. Like, it's the first question whenever we speak to big asset managers or ETP, ETF issuers. They want to know about custody support. So we have to build at the foundation level that support. So right now it's Fireblocks, Copper, Hex Trust, SAFU, and then we have a couple of the big QCs, qualified custodians, in the pipeline for the US. Because personally, I believe like the US is eventually going to open up from an ETF perspective and allow staking. So it's kind of critical for us to make sure that support is there. And effectively how it works is really convenience. These big institutions can go, if you take Fireblocks as the example, they can go on the Fireblocks console, select Lido as a staking provider, and mint stEth. And then, like you mentioned, they can go and use on Deribit as collateral. So the convenience element is critical.
Yeah, for sure. With convenience, we often sacrifice risk and security. How are you guys dealing with that? How are investors and institutions thinking about the risks around stEth?
Yeah, so I think from a stEth perspective, like, it's been battle tested. That's the key part. Like, I think a couple of months ago before the tariffs, like, TVL was around 30 billion, 10 million each staked. So like, there's no doubt, I think, in anyone's mind that stEth is battle tested and it is institutional grade. At the custody level, like, my focus has always been to kind of only work with tier one partners. So the likes of a Fireblocks and a Copper and Hex Trust. So from, again, that perspective, I think we're in a really strong position that there's not many, I suppose, competing liquid staking protocols can say they have that depth of liquidity, that level of battle testedness. And that's why we're going to see a lot of inflows from that.
Yeah, interesting. And what about, obviously, now with staked ETH now becoming a bigger feature around the ETFs? How are you guys? What role are you guys playing on that side of things?
Yeah, it's been a huge focus for myself. So, like, a little bit of context, like in Europe, staking ETPs have been around for quite a long time. So I would say there's 6, 7 kind of major staking ETPs in Europe. But one of the big issues with these products is that they're only staked to 50%. That's their staking ratio. And the reason for that is they have to deal with redemption requests. So this kind of goes back to my point around, like, that withdrawal queue. So, like, typically for an ETP, it needs to be T+2, and the withdrawal queue could be T+7. So that's obviously not good enough. So that's why they keep quite a large portion unstaked. And that's obviously an issue from the investor's perspective, is that they're only getting half the yield. So it could be typical full yield would be 3%, half that it's only 1.5. The whole benefit of using stEth in an ETP is that you could get that staking rate up from 50% right up to 100% if the issuer chooses. So that's been a huge focus for us right now.
Yeah, are these the stake yields you get on stEth, like, comparable to? Yep. So you're not for the liquidity, you're not sacrificing on the yield.
Exactly, nothing's being sacrificed, and you're actually supporting Ethereum and making it more decentralized.
Yeah, it's interesting, and so, like, is this kind of institutional story? Is this a big part of the roadmap for Lido and how you kind of just sort of grow the network?
Yeah, it's a huge focus. I would say that stEth has effectively become the benchmark of the crypto economy or the on-chain economy. My goal now is to do the same in the off-chain world, or TradFi. So making sure that stEth becomes the asset of choice for the BlackRocks of the world, the Fidelities of the world, to make sure that, okay, if and when the US allows staking ETFs, that stEth is part of that conversation.
Yeah. And do you find, I mean, like, when I think of, and the conversations we have with institutions, like, everyone's kind of comfortable with Bitcoin, or they're getting comfortable with Bitcoin, and then they all kind of go out the risk curve a little bit, and then obviously ETH is like the next one. And then, like, when you start adding, like, this idea of staking and you're kind of introducing, like, these new ideas, are you finding that there's just a greater comfort generally with institutions on I guess what the risks are and as well as the opportunities with something like staking generally? Yeah,
no, absolutely. Like, it all kind of goes back to education. Like you said, like Bitcoin, ETH, and probably Solana now, like, that's a big focus. Everyone's comfortable with it. There's this level of trust. So a big part of my job is kind of educating people that, look, stEth is, again, that kind of gold standard for institutional staking. It's a top 10 asset. It's just getting them comfortable with that narrative. And again, like any kind of institutional client you would deal with, there's a huge amount of DD that they do behind the scenes. And a big part of my responsibility is educating them and answering those questions effectively. Because ultimately, no issuer is going to launch a product, or no asset manager is going to hold an asset unless they feel comfortable with it and they understand it.
Yeah. Interesting. And what are these? And I don't know if I'm saying it right. Is stVaults that you guys have?
stVaults, yeah. So this is effectively kind of, I suppose, Lido's transition from being a liquid staking protocol to providing staking infrastructure. So if you think of stVaults, or maybe to kind of, again, take a step back on that, if you look at the protocol today, it's decentralized in the sense of you have 37 different node operators, you have community staking. The issue for a lot of institutions, and the feedback I've gotten, is that they don't really like the idea of not knowing where it's staked. So again, a risk management perspective. So the whole idea of stVaults is this customization element that you can choose the node operator that you're staked with. So for example, if a BlackRock or Fidelity came along and they want to work with like a Figment or a P2P or a Kean, they can choose the one node operator that it's staked with. And what's really important about stVaults, or I suppose the selling point of stVaults, is that we haven't sacrificed the liquidity. So we're not going to fragment it between stVaults stEth and Lido Core or Protocol stEth. It's all going to have the exact same depth of liquidity.
Yeah, sure. And like obviously Lido Finance, staked ETH, like is the plan to actually then incorporate other tokens that would for staking as well?
Oh, tough one. I would say the priority right now is to kind of double down on ETH.
Yeah.
Like in the past, there was Solana staking, or Solana liquid staking, I should say, and Polygon. But for us, I think the core focus is to be an expert in one thing. I think for you to do one thing really, really well, you have to focus on that. And again, my personal view is that even though ETH is probably going through a bit of a transition right now, there's some, I suppose, interesting conversations happening at the Ethereum Foundation from a BD perspective. But again, I think in the future, ETH is here to stay. And for me, if I was an institution and I wanted to place a bet, I'm always going to place a bet on the one that, the protocol that has the most amount of money and the most devs behind it, and that still is ETH as a blockchain. Yeah,
I mean, do you have thoughts around sort of ETH? And obviously, it's underperformed. I mean, what are your thoughts around that?
Yeah, I like, again, it's really fortunate part of traveling and meeting so many different people and backgrounds. Like a big part of the feedback we'd heard from meeting the issuers and the big asset managers in New York is that like they just felt like the BD effort had become fragmented. Like Solana effectively did that really well. They were the tip of the spear. It was quite this unified BD effort, where it kind of felt over the past couple of years, Ethereum never really had that. They never had that one structured entity going to do BD. And that was a big piece of feedback we had heard going to New York. But again, given that kind of positive transition phase I think ETH is in right now, you have the Ethereum Enterprise Alliance doing terrific work. I definitely think the EEA is kind of transitioning away from just doing protocol or standards, focusing more on the BD effort. You obviously have Etherealize now kind of ramping up and doing excellent work. So I think, again, it's a matter of time. It's this maturity that the BD effort needs to really ramp up if ETH doesn't want to lose its position.
Yeah, I mean, it's interesting to me, but we were saying on here a little while ago, like, it kind of, when, it reminds me a little bit of, like the dot-com bubble and when that all crashed, and Bezos was saying about Amazon, it was like the price kind of wasn't doing anything. It was off from its highs, but yet the internal kind of metrics of their business were going, continue to improve, and the adoption and all this stuff, and yet the price just wasn't following. But yet every internal metric suggested that it was improving. And I sometimes think about that with ETH. I mean, particularly interesting to me is like you see the BlackRocks and all these guys launching like their real world assets and stuff, and tokenized assets all on ETH. Now, not so long ago, that would have just sent everything sort of rocketing, and yet right now it's just a little bit unloved.
Yeah, like it's a terrific endorsement. Like I think if BlackRock chooses your network or chain or whatever it may be, it's a terrific endorsement. Like these guys are not foolish. They place big bets and they place winning bets.
Yeah.
But yeah, like it's hard to know. And I think your point again around like back in the day, the price would have shot up. I think again, it probably goes back to the tariffs piece. There's probably a lot of money sitting on the sidelines waiting to see what happens over the next couple of months.
Yeah. And like when you're talking to lots of institutions, like, I mean, presumably you're still seeing that same excitement and demand for launching things on ETH as opposed to maybe some of the other networks.
Yeah, like I think, again, people probably know we're so Ethereum focused, so they're just having Ethereum conversations with me. But I would say, like, people are probably zooming out a little bit more than they did in the past, and they're more open to looking at different L2s, different opportunities outside of kind of the EVM space. But the majority of the conversations I'm having are kind of with institutions who've placed their bet, done their DD, and are just waiting to kind of pull the trigger.
Yeah, sure. And what for you at the moment are the most exciting opportunities in terms of sort of staking, and how that's going to bring like institutional investors, clients into kind of essentially combine this traditional world with DeFi? What for you out there is the really exciting things that we're building and seeing?
Yeah, so I can say like at a high level, like for us, staking inflows from an institutional perspective have actually been pretty consistent from Q4 to Q1. What's really interesting to see is that the churn has reduced by 80%. So like we're seeing a significant, or I should say a consistent inflows, but the churn is being reduced significantly. So I would say that institutions are now holding on to stEth for far longer than they did in the past. So again, I would probably take the insight there that there's a stronger commitment for stEth than there was in the past, even though market conditions are turbulent.
Hodlers, proper hodlers.
Hopefully, thinking long term, that's my hope. But yes, that's the first piece. And then the second piece, I would say, again, going back to capital efficiency, like with native staking, as terrific and important as it is, if you're only getting half the yield and you're leaving 1.5% on the table, I think, again, it just makes sense to go down the liquid staking route. And then more broadly speaking, like there's a huge amount of excitement and focus on getting a stEth ETP launched eventually, and then getting a stEth ETF launched. That would be a big priority. Obviously, the US is a little bit more of a unique situation in the sense of we need regulation to change. But again, the narrative or the selling point is quite easy in the sense of if you want to go from 50 to 100%, just use stEth.
Yeah. How you find, you mentioned obviously on the regulatory side of things, how you find it in Europe? Obviously, US is kind of unfolding real time. How are you finding that regulatory backdrop in Europe?
It's quite good. So like I mentioned, like staking has been in ETPs for quite a while. And then like we would have conversations with issuers who would engage with regulators. So like we're in the fortunate position that like we've BaFin approval, FINMA approval, so German, Swiss regulators. We speak to a lot of the big exchanges like SIX, Swiss Exchange, Euronext. They've all kind of given this kind of past due diligence, let's say, or put it at a high level like that. So from my perspective, the hard part is kind of done. We've gotten the regulator's blessing to a degree, or they've at least said that, okay, it can be used in an ETP. We now just need to engage with the issuers to make sure that, okay, they're comfortable and they're happy to launch something.
Yeah, interesting stuff. Yeah. And it's just great to see, again, just like, I mean, for you particularly, I guess, who's been like kind of in the weeds of this space, you know, and we're talking DAOs and stuff, and that kind of bringing the institutions into all this. It's fascinating how rapidly all this is evolving, right? Yeah,
like educating people on stEth is one thing and liquid staking. Educating people on a DAO is another. Like this whole idea of, okay, we've token holders, they hold LDO, they can vote on forums. A big part of that is getting institutions comfortable with dealing with the on-chain world. So again, it kind of goes back to answering a lot of questions, and more importantly, allowing people to ask stupid questions. Because a big part of what I've seen before, if you deal with senior people who are experts in what they do, and then suddenly there's this kind of transition to something they may not understand, getting them comfortable enough to ask those stupid questions is really important. Because I can assure you, I ask plenty of stupid questions every day, and it's the only way you learn. Yeah, I mean, it's so when I first came into the space from TradFi, you know, we spoke earlier. I come obviously very much from the macro side and think of, you know, certainly think of Bitcoin as just another macro asset, and then you kind of get involved and start thinking about all these protocols and platforms that are being built for this digital age. And it, like when you first, it's overwhelming when you first come into the space. And actually, it's, I mean, you say about, you know, focusing on stEth and kind of, you know, staying in your lane on that. It's quite important actually, particularly if you're trying to build a business in this space, because there's so many different things that are evolving and developing around you that, you know, your attention gets pulled. And at first it's overwhelming,
but yeah, so I think there's a lot of people in traditional finance and these traditional institutions that, you know, very good at what they do, and it is quite daunting for them to then all of a sudden this whole new product that, you know, they might feel stupid at first, but I think you have to get used to feeling that way and just asking all the questions and being open to exploring.
Yeah, no, it's part of the game, I think, especially like as you kind of go through your career and life, like we're all going to have to learn more. It's effectively my job to make their learning experience as easy as possible. So building a ton of collateral, education material, just getting people comfortable so that when they go and present it to their C-suite, they have all the information they need.
Yeah. Well, talking of learning, I caught up earlier today with the founder of Metis, the layer 2, to talk about all things AI and the intersection between AI and humans as a collaboration model. So obviously AI now is like a super interesting subject, and it's becoming one that we all need to sort of learn and get our heads around, because I think it's going to obviously impact, you know, just how we organize ourselves as businesses, as a society. So yeah, check this out. This is with Elena Sinelnikova. Really fascinating conversation. So take a look at this.
Hi guys, it's David here, and I'm delighted to be joined today by Elena Sinelnikova, who is the co-founder of Metis. Elena, welcome.
Thank you, David. Thank you for having me.
No, it's great to have you on, and I'm really interested to have this conversation, and particularly some of the areas that you sort of talk about around this kind of intersection between AI and human collaboration. But before we get into that, for those that sort of don't know you, would love to just know a little bit about your background and your path into crypto, and then get into what you guys are doing at Metis.
Oh, thank you, David. So maybe then just quickly the introduction that I give. I am also co-founder of CryptoChicks, and that's how I started in the space. Before that, I was a software development and software architect. I worked for Canadian government and for Canadian police as well. So the systems that I created in the Canadian police, they still exist there. And I quit my corporate daytime job to do blockchain because I was very fascinated, and CryptoChicks was my first venture. Started just as a meetup for women, where me and my co-founder Natalia Amelin, who also happens to be Vitalik's mom, we explained for women on how to deal with the blockchain, because there was not a lot of information back then. And that meetup grew into the big conferences, worldwide conferences, and on one of the conferences, I met my future co-founders of Metis, Kevin Liu, who I met first, and he came to me. And after a year of having discussions, we actually launched Metis, and Metis as this is something that when I was in CryptoChicks, I was educating women. This is something that I, envisioned to have a decentralized world, happy society, where we have, a place to work without leaving our homes, maybe without leaving our countries, cross border, where everyone has the opportunity, is equal, and have this infrastructure to support it. And Metis is become that infrastructure for us. And now this is leading into what our discussion. The world has changed ever since, and our new developments is directly related to that.
Yeah, cool. So talk to us about Metis and what it is you guys are building there. Most people will know it as a layer 2, but yeah, what's the mission and how you guys differentiating yourselves from other layer 2s, which obviously we have a lot of layer 2s these days.
Yeah, when we started, it was like not a lot of layer 2s. It was like maybe 1 or 2 or 3. So it was different world. We started not because we wanted to start layer 2, but because we wanted to build that infrastructure where everyone can work and learn and be and be together and be free. So that's the layer 2 we just used as an infrastructure, because Ethereum is decentralized and layer 2 is fast and quick and cheap, and therefore can be built upon. And that's where the layer 2 comes from. we've done it successfully. We had lots of projects, and we still have lots of transactions and applications that are running on Metis, and we created the whole ecosystem. Even our team itself is the manifestation of what we were building. All of us are working from different countries. All of us, are free. We have free schedule, and we also work all together very independently, but at the same time together. So that's the vision that we had. We pretty much realized. Though at the last year or two, we noticed that layer 2 ecosystems were growing, and new layer 2s like, mushrooms popping up. Every day new ones. And it kind of becomes the system that looking for, fast profit, something, new big thing, quick, pump and dump, and why, when this, when that, and became a little bit of, why do we even do that? Why do we have all that space? Because when Vitalik created Ethereum, when we created Metis, we had all this in mind of the happy society working together. And it became a little bit stale. But what is most important, that the huge change came that was probably expected, but it made us to change the whole, to rethink everything. AI. When AI came on board in the world, now all this, happy society is turning into something else, and it's very worrying, because really whoever owns the data that AI trained on has all the power. And no matter what we do with the layer 2s or layer 1s, it doesn't matter anymore. Therefore, it's our turn to have our say in that new society where AI exists. And we started from, thinking of the philosophy of why. What do we do? Why do we have all this, catching, like when is the token grow or when is the token fall or something like this? What is the end goal of all of this? Really, the end goal is that, we want to be happy and free. And that's how people actually want it to be from the beginning of ages, as we know it. That's hence we released the article recently, and that philosophy came a while before, actually, once we started realizing and building and welcoming AI into our lives and working with AI. But how do we work with AI? And that's exactly what the article was about.
Yeah, it's interesting because like I'm very guilty of, like, given my background, like from a kind of trading, investment banking background, we're so kind of wrapped up in this like institutional adoption story, that I do sometimes feel like the original principles of like decentralized finance, and Web3 have kind of essentially almost being forgotten about. And obviously, like you say, there's lots of pumps and dumps and lots of scams, and we've kind of moved a little bit. Yeah,
it's that kind of like a Groundhog Day, we live in, bear market, bull market, bear market, bull market, and we're all waiting for a bull market that might never happen anymore. Why? Because of the AI, actually, because the eyes of the people are looking the other way now. So that's why.
So it's really interesting to me that you've kind of stuck very true to these sort of principles of decentralization and freedom and kind of democratizing finance and all these things for people. And yeah, like you say, AI is now it's the biggest elephant in all rooms in terms of how we deal with it. And it's a huge opportunity. It's also a huge threat. and you're obviously thinking very philosophically and practically about these issues. So yeah, so this like sort of community letter that you put out. So talk us through that and the ideas, you know, and certainly as well the philosophies that you start off with in terms of how society could organize themselves. Talk to us about that, and then how that's led into some of the things that you're building to incorporate this collaboration between AI and humans.
So as I said, like my first thought was, yes, like whoever owns the right now AI data, and then the big corporation, they collected all this data all this time from us without us knowing it. Actually, maybe we even knew it, but we didn't care much. But actually, now that AI is training on that data, it becomes a power. And this data, unfortunately, in one hands, who can actually manipulate the data and who can corrupt AI to their liking. So that's probably this is what like doesn't sit with me very well. And of course, blockchain is the perfect solution because that's how we create the decentralized world. So decentralize the data, right? So like the decentralize that power, and therefore this is one thought. Another thought that led me to, to writing this article about the philosophy and about the whole new Metis idea is all philosophers, if you take philosophers from Plato, Aristotle, like from ancient times, they were all united that happy society is always led by most educated, virtuous, and wise people. So, and that's how, and who is most educated right now, or who has a potential to be the most educated?
AI.
The robots. Exactly, because it learns like this. But it also depends on the data that you feed it to learn, right? So, but who controls the data? It's actually humans. we do have control of that. And also, like another thought and another thing that I took from the philosophy, like Hegel, for example, that all societies always developed in there's a law of development of the society. There are dialectic laws. So the dialectic law by Hegel is like if you have one force that has a status quo right now, that eventually it's going to be negated by another force that will come into power. But then in the end, it's actually not one or another going to be in power, but the synthesis of both. And that's what's going to be the ultimate power. So it's very natural that it's not, humans or then AI come into power, but actually the synthesis of both. But how the synthesis looks like, it's up to us to decide right now still. So, and therefore it led to my article that human lead, AI empowers. AI acting as the wisest advisor, but human with the, with emotions and the heart still lead it. And therefore having this philosophy at heart, we can now create a new system. And there's a question that answered, why do we do that? We do that to create the happy society. And that's the only kind of stable combination when we work together with the AI. When we use AI as our wisest advisor, that will allow AI to have humans in check, but at the same time, we check AI by, by our hearts, because it doesn't have a heart. It doesn't have feelings. It only have a rational, let's say, mind, right? So that's combination of AI and humans is what is going to lead us to that society. And with that thought in heart, we created that new vision of Metis. Actually, vision of Metis is still the same as a decentralized happy society, but with the new reality of how do we work with the AI? How do we get all this data that train AI? How do we put together humans that will be checking this data, that will be creating those this training data for AIs, that will be creating those AIs that it's not only wise, but also has human element human heart and human emotion into it. And that's where the project like Less AI that we have created is being born out of that. That's where we now launching a new chain Hype, that Hyperion, that is actually AI, has capabilities to run AI apps, because none of the layer 2, if you put AI native apps on it, it will not be fast enough for the AI. AI is not transactional. It actually grows, it evolves, it learns, and therefore just a normal blockchain doesn't suffice for it. So therefore, we created now dual chain system. We have one chain for the Web3 transaction and one for, AI native, for AI computations. And all is that also connected to the Laz AI infrastructure, where people coming together, where it is they keeping AI in check. They creating IDAOs where actually the data now has a value, and not only like big corporation that owning this data, but me and you, we can contribute the data and then monetize it. So that's the whole new system and infrastructure born from the philosophy of AI plus human.
Yeah, wow, that's interesting. And how do we? I like this idea about AI as like the ultimate advisor, right? Because the knowledge base and the ability to simulate data, and kind of make decisions. Yeah, how are you thinking around like the integrity of that? It's great that AI will better be able to look back and perform analysis of data and past decision making. But how are you thinking around, obviously, in terms of the output and the advisory role that performs will depend on like the integrity of the AI itself.
Exactly. You're asking the right question. Yes.
Yeah, and how are you thinking about that and ensuring that we're kind of getting the optimal, the kind of optimal advice, if you like, for this happy society and most efficient way of organizing ourselves.
And that's exactly what Less AI, like the value proposition of the product that we call Less AI is ability for the people come together and actually check the AI. It's the whole system, the infrastructure created just for that, just to keep AI in check, just to keep that data in check. But nobody beside humans, we can do it. We are the only ones that can do it. Of course, we can do it with the help of the AI, but it's also going to be awareness of who is checking who and how do we do it. So that product is developed exactly for that. But not only even for checking the data, but actually as you check the data, and there is IDAOs. So this the concept of IDAOs, when the humans come together and checking on the data with the AI and bringing the data in and cross check as well. So that is the heart of Less AI proposition, the IDAOs of humans. And in the end, we can come to the consensus of the data, us as a human, that's good enough. It is good enough for us. So now we can train AI and AI can learn, and we can take advice from AI on that.
So with that, how do you say it? Less AI?
Less AI, yeah. LAZAI.
Right. Okay. Got it.
Yeah.
Like, so I'm just trying to get my head practically around like how that protocol is used, by someone like me, or like how is that platform to be used, from a kind of practical perspective?
Okay. Like, for example, do you have kids?
Yeah.
Yes, you do. Okay. So, amazing. Okay. So this is amazing case. Like, for example, you and your wife, you have some principles probably how to bring them up. And what to expose them to. That's exactly. So think of it that you are training your nanny AI on how to bring up your kids. For that, you and your wife come together and decide what your kids are allowed to learn from and what they should not be exposed to. and you bring all these data sources, and you constantly also recheck and approve them. And at the end, AI can train on it. And while you cannot attend your kids, instead of nanny from Philippines, who obviously, will raise probably your kids Filipinos, you have that AI that train you, like that actually attend your kids and educate them. And they are educated to your liking, and you and your wife, in this case, this IDAO. So that's kind of practical case that I can explain, in simple terms.
Yeah.
Yeah.
Okay. Yes, that's super interesting. And how's what's the sort of growth of these networks look like that you're building at the moment? How is that evolving, and like what are the kind of key things that you're looking at every day in terms of how you're developing this business?
Yeah, so right now as we said, like Metis Layer 2 has been launched and been live for a long time. So we already have applications there that already started embedding this AI ideas and how to train AIs and how to use AIs in their business. So some of them, they might move to the new hype chain that AI optimized. And the test net right now of which is being produced. So there's a kind of, we don't start from the ground zero. We're already starting from what we've already been building. At the same time, this product-less AI is also going to come into play in August. So that's where so right now we are still in this, deep development phase for the infrastructure of that idea that I shared, of that philosophy that I shared.
Yeah. So I've got to wait till August to bring up my kids properly in the most optimal way.
Exactly. Yeah. So right now you might start thinking, which data sources you want to trade them or expose them to.
Yeah. And I like, how are you planning on integrating this into sort of core businesses and
yeah, so we thought about the use cases, and that's what I outlined in the article, actually, with this philosophy in mind. AI helper and advisor to us, to humans, and we choose of what AI train on, is we can solve many problems, from global warming, if it is a problem, and AI has to actually tell us if it is if it is really a problem, right?
Yeah.
But from this global problem up until like maybe small business problem, maybe you have your your business where you manage your employees, and you would like to also see what values and what like maybe like some educational resources that you want your employees to be embedded into a daily life, like into daily operations, like nonviolent communication, or the teamwork, the trust, everything that you would like your employees to be exposed to, right? So you can build this data inside your company. So an I data, and then maybe you and your co-founder come together, or you and your co-founder and maybe board of directors come together and decide of what is going to be that AI that you're going to train your that you're going to train on your data set, that is going to be teaching your employees. Or it's going to be related to your business, if you have like warehouse business or something like this, or the I don't know, you ship in products from somewhere. Again, you can train your AI that efficiently going to do the distribution for you, based on the data set that you and your co-founders and your board of directors come together and say, okay, so we want our company to look like this, like this, like this, like that. We're going to take the best practices from that company, how they did it, from this. You build your IDAO and data set, and you train your AI. And then you can actually resell that AI to the other companies and earn from it as well. So that's where this, we also have the DAT token, which is a completely new protocol of the tokens that is a semi non-fungible token that is actually will define the value of your AI, of your training data set that you built.
Yeah.
I think what's going to be really interesting with all of this is I love this idea of, say, AI as the advisor, but humans have like the kind of heart and kind of like intuition and all these things
and emotion. Yes.
that are also an important part of decision making. I think what's going to be interesting though is when that AI and the kind of almost objective advice from the data that it will provide, when that conflicts with a lot of our kind of subconscious biases, around things like you mentioned there around global warming. I think there's a lot of preconceived biases around that. And then if the AI starts to say contradict that, let's say the AI was to kind of say, look, we've not got a human driven issue that's contributing to climate change. And we've got a whole government got global sort of push to net zero that's based on an idea that actually climate change is being impacted by human activity on the planet. It's going to be interesting to see how humans can kind of sort of drop that bias to accept what the data is showing us.
And then the AI can provide all the proofs, right? So not only it learns fast, but also it researches fast. It can build its own research, analyze the millions of data in 1 second. So like we make our decisions based on something. Right now, honestly, we make our decisions based on what we see on YouTube. Right? So Instagram. So like it's not good reliable source. Well, I mean, except for your podcast, I think. But you get the idea, right?
Absolutely. And it would be fascinating, like, to see what a Donald Trump would do with some feedback and information that he might get from a model such as this.
Well, Donald Trump is a wise man. So he if he has all the data and everything, I'm sure he will make a right decision. But again, you brought very, very good point. And that's exactly what I wrote in my article. The accountability is still human. So we cannot keep AI accountable. We can use it advice, but decision still has to be human. And we going to be accountable for that decision one way or the other. It's going to come to us. So therefore we are, very, very motivated in doing a good job in that. And
and I guess like the reliability will be, how again the intentions of humans and what they're ultimately trying to achieve. So it's kind of effectively from what you're saying, and sort of using your platforms and with this use of AI, we should have the kind of best, purest, rigorous data source and provision of and advice. I guess in terms of how we use that, interpret that, and then apply it to what we're trying to build or trying to govern, will come down to some of the sort of human ideals and belief systems. But at least I guess we can make those decisions based on the sort of best data that's available to us.
Yeah, and the blockchain is a perfect tool for that. And also because we're putting now this everything that we've been built in blockchain before, like for example tokens. Now we tokenize it, and the market will define the value of your AI, right? So it's not only you that you're going to say, "Oh yeah, my AI that tells about researches about climate change is the best." Well, no, maybe somebody else will create another, and somebody else another, and then market decide which one is the best. So it's all comes to that.
It's fascinating. Just before we wrap up, I'm just quite interested. Like obviously, one of the things with AI, I mean, this huge opportunity that it's going to bring to society, and it should lead to like an explosion of productivity. At the same time, obviously, there's this huge concern around what does it mean for like the labor force and for like how many sort of jobs and roles is it going to displace? What's your view on that in terms of this collaboration between humans and AI, but what that actually means for society and for economies and how we kind of organize ourselves in a world where potentially there's going to be a lot less need for human labor?
There are gonna be stages. Actually, right now with the technology that we develop, only the white collar jobs are being displaced, right? So doctors, but the ones that don't do the surgery, but the diagnostics of the treatment, or like diagnostics, and also deciding the treatment for the patients. For example, researchers, all the researchers, AI can do the research much better. So all this that doesn't require like mechanical jobs, it's actually gonna be replaced first. But you see, it is kind of, as I said, this is the law of dialectics. So there is something better that comes in and is going to negate of what we had that was not good enough. But then it emerges as a synthesis. So instead of doing, just like, some bad doctor that just gives you a diagnosis and don't do anything else, and it's going to be replaced, this doctor is going to be forced to learn something new to provide some other value. I don't know, maybe there is there's evaluation that he will be doing for the AI data sets. There is other jobs that human can do that AI can't. So we should not be afraid that AI is going to come and take something from us. It will. But for us, it is a great opportunity now to learn and to do something else, something probably more exciting and better, and not as mechanical.
No, that's that's kind of how I see it. And over throughout history, when we've had these technological advancements, there's always that panic that okay, we're going to displace sort of huge waves of the workforce, but actually we probably just evolve and do hopefully more useful things. And it's certainly exciting in terms of what it's going to sort of deliver for society and the improvements in society. I think, as well, as a very macro guy, just what it means from I talk about disinflation, and like we're still in a very much disinflationary world, despite these kind of short-term spikes in inflation, and certainly the technology and AI is going to really kind of feed into that disinflationary world, which should done right make life sort of cheaper and and increase people's kind of baseline of what we all have in our lives. It should be, if done in the right way, lead to a much better society.
Absolutely. Well, we will come to the better society one way or the other.
Yeah.
But that's what we see. Like, that's what I see clearly. AI is an advisor, humans as the leader, and again, it's going to be like this.
Yeah.
That's what we are building.
Yeah, and I think that's the word I was looking for. It should increase our standards of living substantially, if done in the right ways. So I certainly applaud what you guys are trying to do to sort of play that part. I hope AI doesn't replace myself and Imran on the podcast. But
well, I mean, if it does replace you in some way, probably as a helper of you, so you can do other great things.
No, absolutely. Look, this has been a fascinating conversation. I think we could continue. Just there's so much to sort of delve into. So thanks so much for coming on and sharing some of those thoughts, and really interesting what you're building. And I just want to end on just on a really good note in terms of I just love that philosophy of and you'll say it better, but it's a decentralized, happy society. That's the mission, right?
Yes, decentralized, happy society. Yes.
Let's hope we can all build towards that.
And we're all our blockchain space, we're building towards that. We never put it into the words, we take it easy, looking for the bulls and bears, yes. But that's in the end, that's what we've built, and look how many people came together from different countries, people who didn't have that opportunity before, how many people we made actually happy. And that's the society we built inside already. We have to give ourselves the credit.
Yeah, sure. Elena,
Yeah.
thanks so much. That's been amazing.
Thank you, David. Thank you.
Thank you.
So what do you make of that?
Incredibly interesting. I actually think I have a lot to learn now when I go home.
Yeah, I think, I mean, this is the whole point of this podcast, really, is to keep asking the questions and keep people learning. AI is just another one that's mind-blowing to me. And particularly in this space, blockchain driven, you know, they're kind of complements, right? AI, blockchain, and decentralization. So yeah, I felt that was really interesting. So thanks to Elena for joining us on that. Remember as well to like and subscribe so we can keep getting guests on like Elena and Kean here. Kean, listen, thanks for coming on. It's been very interesting. Great to see what you guys are building and your contributions to the space. Thanks very much.
Oh, thanks for hosting.
Thank you. And we'll see you guys next week.